All right, good morning. The market is kicking off the day on the back foot, really trying to find its footing after a pretty tough session yesterday. You can feel this anxiety in the air. And today, we're going to break down exactly what's causing it.
Right now, on trading desks everywhere, there's this real sense of tension. It's like everyone's just hit the pause button, waiting to see which way things are going to break. The market is truly on a knife's edge.
And we can actually put a number on this feeling. The Fear and Greed Index, it's sitting at 38. That is smack in the middle of fear territory. Now, what's really telling is that just a week ago, this number was at 43. That's a pretty sharp drop in a short amount of time. So the billion-dollar question is, why?
Okay, let's dive right in. See, to understand why everyone's so nervous today, we've got to rewind and look at what spooked them yesterday. This anxiety isn't coming from just one thing. It's more like a perfect storm of factors that all hit at the same time. In fact, you can trace this whole mood back to 3 separate but totally connected stories that played out on Wednesday. And getting a solid handle on these is absolutely key if you want to be prepared for what's coming next.
So here's the trifecta. First, we got a pretty worrying signal from Walmart, the biggest retailer on the planet. Then, headlines out of the Middle East started stirring the pot, adding a whole new layer of risk. And to top it all off, the Federal Reserve basically poured cold water on any hopes for quick rate cuts. Let's break each of these down. This is really the question that kicked everything off. For ages, the story has been about the super resilient American consumer holding up the entire economy. But a warning from a retail behemoth has just put a massive crack in that story. And yet, that warning came from Walmart. Think about it. This isn't just some company. They serve over 250 million customers every single week. They're a real-time pulse of the entire economy. So when Walmart says its customers are pulling back and getting picky with their money, Wall Street sits up and listens. The fear is that this isn't just a Walmart problem, it's an economy problem. So just as traders were trying to process that Walmart news, a second story starts rattling the markets. Headlines pop up about new threats from Iran, and suddenly the debate on the trading floor is this just political posturing, or is this a real, genuine risk we need to worry about?
And here's why that matters so much. The Strait of Hormuz, it's one of the most critical choke points for global oil. We're talking about a fifth of the entire world's daily oil supply passing through that one narrow stretch of water. So you don't even need them to actually close it. Just the threat is enough to send oil prices spiking, which, of course, adds fuel to the inflation fire at the worst possible time.
And that brings us to the third piece of this puzzle, the Federal Reserve. The market has been desperately hoping for some sign that the Fed is ready to start cutting interest rates. But the latest notes from their meeting? Yeah, they did the exact opposite.
The tone was what traders call hawkish. It means they're still way more worried about fighting inflation than they are about helping a potentially slowing economy. The market was pricing in rate cuts for 2026, but this just throws a wrench in those plans. And the immediate effect? A stronger US dollar, which makes it tougher for US companies to sell stuff overseas and can hurt their profits.
So that's the trifecta of fear that brought us to this point. But now, let's pivot. Let's look from yesterday to right now. Because with all that negativity swirling around, the market's focus has laser beamed onto one single piece of data that's about to drop. Now, look, the calendar is packed this morning. We've got GDP numbers, manufacturing data, and while those are important, they're really just the opening act. Because the main event, the number everyone is waiting for, also drops at 8:30 a.m. Eastern.
Seriously, forget everything else for a second. All the headlines, all the noise, all the fear from yesterday, it could all get wiped away or amplified depending on what this one number says.
And that number is the core PCE price index. So why the big deal? Well, because this is the Fed's favorite way to measure inflation. When they're deciding whether to raise or lower interest rates, this is the number they're staring at. You can think of it as the Fed's report card for how they're doing in their fight against inflation. And here it is, the magic number, 2.6%. That's what everyone expects. Now, if the actual number comes in hotter than that, look out below, because the sell-off could get worse. But if it comes in at, or even better, below 2.6%, we could see a massive sigh of relief from the market. The entire day is going to pivot on this number. So while we're all waiting for 8:30, Wall Street is pretty much split down the middle. You've got two camps, the bulls and the bears, and each one has a totally different story about what's happening. Let's take a look at what they're both thinking. This lays it out perfectly.
On one side, you have the bulls. They're saying, hey, this is just a healthy pullback. Fear is a buy signal, and if that PCE number is good, this whole negative story could flip on a dime. But then you've got the bears. They're saying, no way. Walmart's warning is the real canary in the coal mine. The Fed's in a tough spot, and the momentum is clearly shifting down. That 830 number is going to prove one of these sides right.
Okay, so what does this all boil down to for you? Let's cut through the noise and get to the critical, must-watch info you need for the day ahead. From a chart perspective, these are the lines in the sand. For the tech-heavy US100, that 24,200 level is everything. If we break below that, it could really open the floodgates for more selling, and fast. And you're seeing similar make-or-break levels for Germany's DE40 and for gold. And here's something really interesting. Check out who is actually selling right now. The Fear and Greed Index tells us that smaller retail investors are the ones getting spooked and heading for the exits. But the big money, the institutions, they're not hitting the panic button. Not yet anyway. They're holding firm. If they start to sell, things could get ugly. So that's a key dynamic to watch. So the bottom line is pretty simple. Patience is your best strategy today. All this analysis, all this fear, it could all be repriced in the blink of an eye. The single most important move right now is to just wait for that 8:30 a.m. data. It's going to define the entire trading day.
And I'll leave you with one last thing to chew on. While all this craziness is happening in stocks, gold is quietly knocking on the door of a massive, historic level, $5,000 an ounce. And the big question is, with all this uncertainty floating around, is that number a hard ceiling, or is it a launching pad for the next big move higher? Something to think about. Stay nimble out there.